Hello YouTube. Right, this is an excellent little article on the free gold money report, and it's by Jame Turk. Now this article leads on nicely from the video I did earlier on today, in which I tried to reassure people who may be a bit fearful about their gold and silver investments. I'll read it to you, and I'd be interested to hear what you have to say. Okay, the article is entitled 2 Important Messages from the Fear Index. January the 20th, 2010. The Fear Index remains within its decade-long bullish uptrend, so we therefore know as a consequence that gold also remains within an uptrend. But the Fear Index is also giving us another important message. It is that gold remains undervalued. Gold's valuation is indispensable information given its exceptional appreciation this decade. In other words, even though gold has risen 9 years in a row against the US dollar, it remains relatively cheap. This conclusion is illustrated within the following chart. The dashed horizontal line in this chart marks 2.63%, which is the average value of the Fear Index since August 1971. That is the date when President Nixon, with total disregard for the US dollar's 180-year history, turned the dollar into irredeemable fiat currency, in effect declaring by presidential edict that the monetary requirements of the Constitution were null and void. The Fear Index is presently 2.05%. Note that it is lower today than August 1976, when the Fear Index was 2.28% and gold was $104 per ounce. Therefore, gold at $1,106, its December the 31st, 2009 price, is even more undervalued than it was at $100 back in 1976. How is that possible? How can gold be more than 10 times more expensive today and still be better value? Simple. A $2010 is not the same as a 1976 dollar. The dollar's name has not changed, but the dollar has been terribly debased over the past 34 years. It has lost much of its moneyness, its innate value as money, in two insidious ways. It has lost purchasing power because of inflation. Secondly, it also has 0.23% less gold backing today than it did at the low point of the Fear Index in 1976. Even though dollars can no longer be redeemed for gold, dollars are still partially backed by gold. The Fear Index measures to what extent gold backs the dollar, assuming of course that the 261.5 million ounces in the US gold reserve really exist and have not been loaned out, encumbered or put in play as part of the gold price suppression scheme led by the US government. What is clear from the above chart is that one cannot use the dollar price of gold to determine whether or not gold is good value. The purchasing power of the dollar and the extent of its gold backing are ever changing, so the dollar is not a good measuring stick. It is not a numeraire. The important conclusion from the above chart is that gold remains relatively cheap. We should therefore continue to accumulate it. And as I say, that led on nicely from the video I made earlier on, in just being able to point out that gold and silver are both still undervalued, and that they've still got a way to go before they reach their real unmanipulated price. So by all means have a look at it. The chart's quite interesting, and enjoy. I'll speak to you later. Bye bye.